S&P.
That's
it's
right.
almost a swear word like the banks are. So if we look at the ratings agencies, we went through the journey earlier looking at what's happening in the financial markets. A lot of pressure in terms of actually properly evaluating the real risk around entities from sovereigns to corporates to parastatals to understanding business so that we can effectively guarantee that we have a good understanding of what the underlying risks are. So talk to me about, in South Africa, we're obviously concerned about the fact that we're potentially going to be downgraded. Let's talk that through. And then I also want to look at how you effectively look at the risks and assess a value to sovereigns in Africa.
Okay. Well, South Africa is on a stable outlook, so the most important thing for the viewers at home to look at is the outlook, and the outlook is stable at the moment. We have brought down the rating twice in a few years, so at the BBB- level it is stable. So it's very unlikely that a rating agency will move a rating from stable straight down. Usually the outlook is a good signifier. So I think a lot of the kind of press that's being used about will we go to junk status for S&P, by the way, that's not a rating agency term, that's an investment bank term, you really have to signify the outlook. And we are seeing some kind of economic bounce, even if a modest one, because of the impact of the Labour from last year, obviously not coming through this year. There is restraint to growth, but on the whole it is looking a slightly better economic picture, although obviously not booming.
And Eskom?
Eskom is a restraint to growth, and will continue to be for a few years. If things get significantly worse, then yes, it is a rating factor. But then the entire infrastructure gaps are a rating factor, not just Eskom. Eskom is more direct. We hear a lot more about Eskom. And obviously we rate Eskom as a different entity anyway. But the infrastructure gap continues to push the problems through, and this large social problems that happen in South Africa.
So if we look at we've looked at a couple of real success stories in Africa over the summit, and one of the things we've spoken about is the collaborative efforts between government, the private sector, and then just talking about regulations and how to make this game work and a win-win scenario for both sides. So if we look at what's happened in South Africa, and with regards to the S&P outlook, what do you think are, not just in terms of the budget that we've recently seen, but are you cognizant of the fact that the language used around a budget can potentially be to allay fears, or are you much more data-driven in terms of actually analysing the underlying macroeconomics?
It's a bit of both. Our criteria is as qualitative as it is quantitative. There is obviously quantitative metrics, and if you look at the South African story, on a purely quant basis, it's gone downhill. Debt to GDP, the economic growth story alone would show a picture where the rand's gone. There's so many market indicators would show South Africa's a weaker credit. But having said that, there are kind of the inherent strengths of South Africa, the strong institutions. Not many people talk about how strong Treasury are, how strong the regulator is
and
here.
The banking system.
And the banking system is very strong. It's a great example. And therefore we do also factor that very strongly into South Africa's rating. And to be quite clear, South Africa's rating wouldn't be where it is today without the strength of those institutions.
So let's move over to Africa now, because one of the things that we've been talking about at the summit is about creating that level playing field. In Africa, we battle for lack of transparency because of the fact that there's not a lot of data, there's not a lot of infrastructure. So measuring those quantitative issues is relatively difficult. However, having people on the ground that understand the underlying economy certainly makes for a better decision. So talk to us about how S&P looks at sovereigns across Africa in terms of trying to rate those.
So there's 18 sovereign ratings in Africa, 2 of which are investment grade, South Africa and Botswana, and Nigeria is the only BB credit. All the other credits are in the single B level, and that would seem to show that from a single B, obviously it's fairly risky, but the spectrum within the BBB is obviously BBB-, BBB and BBB+. There is the way that we go about it. We have very clear and transparent criteria. You're talking earlier about some of the impacts of the crisis. We've been very clear in our changes to criteria to make it sure it's very transparent now, to a point where anyone with a credit background should be able to pick up our criteria, use similar data and come up with a rating within 1 or 2 notches. That was the goal of the criteria. So we've managed to do that across the continent, and you can see that across the African continent there's a number of generalities. Weak GDP per capita, fairly weak institutions, and an infrastructure gap. They're commonalities across the African sovereigns, which leads them all to be in the single B category, or most of them.
So one of the things that we can look at, and certainly where Thomson Reuters comes in, is talking about infrastructure. How do we collaborate better across the regions to create those infrastructures that don't become a cost implication for a single sovereign, but rather work as a unit together? Are these issues that you think that, just to wind us up quickly, just to talk about, are those opportunities for the African sovereigns to potentially improve their rating?
Yes, anything that plugs the infrastructure gap is going to improve credit ratings, improve employment, improve GDP per capita. They're the things that are going to lead to credit ratings uplift.
Thank you so much. I really appreciate you being on the show today.